Good afternoon and good evening, Alpha Traders. Coming to you live from the Crypto Caravan. Been moving all day. Beautiful thing. Packing up my storage pod, getting ready to send it off Friday morning to the property in southern Indiana. Yeah, that's right. I said southern Indiana. Moving out into the boonies. Yes, yes, yes. And today's stream is brought to you by 10 gallons of caffeine, and I am jacked to the tits. So this is going to be off the hook. Let's roll. So Bitcoin, what's Bitcoin doing today? Okay, I talked yesterday in the stream. I said the exact number. Said look out for the new daily range to be around 36K. Okay, 36K is what I was looking for. The center of the daily range was at 35.7. Top side was 36.183. Bottom side 35.220. I also said look out for $1,000 daily price action volatility range. It was pretty much $1,000 daily range, and that 36K number was kind of a point there. I was going to see if the bulls were going to defend that area. They have so far. And you can see what happened as soon as we opened up the day. Right? We had a little bit of a dip, Bitcoin just going back and forth. It went down to the new center of the daily price action volatility range. Right? I even said it was going to drop. I said the daily price action volatility range, here was yesterday, was going to drop a little bit and spread out to about $1,000. Once you use this indicator for a long time, you'll be able to call it every day. And in the last 4-hour candle, if you are actively trading, I highly recommend don't trade. Try to look, see where the new daily price action volatility range is going to be at. Okay. I even said yesterday, right? I said price action is going to probably come down before the close of the day and test this new daily range. Well, it started right before the end of the day. We had a little pump. As soon as we opened, that's when it came down. Then when we got the low of the day, it bounced to the dollar off the center of the price action volatility range. This is why we use this indicator. It's a no-brainer. I don't care what anybody else is doing out there. As alpha traders, we know what we're doing. We're trading the distribution. We're trading price action volatility ranges. We're trading statistics and volatility. That's all we care about, right? Everybody else can trade whatever they like. We don't care. Yesterday, Bitcoin shot into the weekly range. Weekly price action volatility range. Here's the bottom of it right here. It's right at about 37.1. Okay. The center is right up here at about 37.9-ish. Top side about 38.750-ish. Okay, so here's the weekly. We have one stab into it, two stabs into it. And just a little while ago in the previous 4-hour candle, we got a stab up into it. I'm telling you right now, the bears are going to defend this area, especially the center right here, the 37.9-ish. Okay. For this to be a sustained drive to the upside, not only do the bulls need to start closing some 4-hour candles, preferably a daily candles up above 38.750. If they can do that, then that's just the beginning. They need to put a couple thousand, $2,000, $3,000, $4,000 in between the top side of this price action weekly volatility range and the data set. It is a magnet for price action. That's why right now we're not seeing a dump after getting this new weekly range. Not yet. The bulls need to wake up. I'm telling you right now, whoever puts that distance to the downside or the top side of that weekly price action volatility range, that's going to determine what's going to be happening the rest of this week. It's only Tuesday, right? Probably even going into next week. Is Bitcoin going back to 50? Is Bitcoin going to 20? Is Bitcoin going to 30? Everybody's just shooting these numbers out of their ass. It's ridiculous. I have turned off YouTube. I can't watch these idiots anymore. They're grifters, man. They're just trying to get clicks. We don't care about the clicks here. We care about being precise. We care about giving people the probabilities to both sides, what the real areas of interest are, not just data sets, right? not data sets, not traditional support and resistance lines that get broke all the time. We don't do that here. Right? We trade the distribution. We trade the daily, weekly, and monthly price action volatility ranges. That's what we trade, right? That's all we care about. So you heard it here first. If the bulls can get up, start closing 4-hour candles, preferably a daily candle above $38,750, we're probably going to see price action start climbing up at least till the 40K area. These bulls need to put, like I said, progressing through this week, the bulls need to put $4,000, $5,000 between the data set and the top of that weekly range, or I guarantee it, the price action will drop back down to that weekly range. It is a very strong magnet for price action. Same with the bears. To tell you the truth, the bottom side of this weekly, 37, mark my words, if the bears can push this back down to 33, 32, we're dropping under 30 probably. This is going to determine what's going to happen the rest of this week and going into next week. Right now, there's a lot of indecision. There is a battle going on. I'm sure if you went onto the website that shows all the big buys and sells, there is a total battle going on right now. Who will win? I'm telling you right now, the bears have spent a lot of fuel. They sure have. They've spent a lot. So if the bulls want to come out and fight hard, they're going to take this thing above the weekly range. Then it's going to probably scoot to 40, and that's going to determine. Let's see what's up at 40. Let's see what we got up at 40K. Well, today it was pretty much about third standard deviation, normal distribution. I'm looking for some significant. Here is the top of the weekly. Okay, 38,750. You know what? I'll tell you what. If they can get up here and close above that 38,750, this thing over the next couple days is probably going to rocket to this first weekly R1, 41,875. Look for that number. Then they're going to have to get up there and close above it. Where's the next weekly? Where's the weekly R2? Weekly R2 is 47,440. Weekly R3, back up above 50K. This is what we're talking about. Price action volatility ranges. That's all we give a shit about here at Alpha Trading. And if you're just tuning in, Bilbo is jacked to the tits on caffeine. So, yeah. Just sit back, relax, and enjoy the show. Okay, that's enough of the VRE, but you can see what's going on here. We bounced right off the center of the daily range, period. And what did we do? One SD move. Okay, now we're back down inside the 68.3 Laplace distribution range. There was a 68.3% chance Bitcoin's data set is going to close here by the end of the day. There was a 68.3% chance Bitcoin will close in between this first standard deviation normal distribution range. Let's see what happens here. Where's it? Regardless, right? It's probably going to close in between the first standard deviation range normal distribution. I want to see if it closes in the Laplace. Can we get back up above? This is the biggest thing here. The bears coming towards the end of the day, they're going to fight. They do not want the bulls to close a daily candle inside this weekly price action volatility range. That'll put the ball in their court. This thing could then have enough juice to break up to the top side of that weekly range, 38,750, and it'll progress just like I just said. So let's see what happens. Now, let's see here. What chart do I want to go to next? Yeah, I mean, you can see what's going on here pretty much too. This is the weekly distribution chart. I've got two different Laplace distribution projections going from the 60K to 29K dump and from the 41K low. I've been talking about this 68.3% Laplace distribution range on that projection from the 41K low. You can see how it supported the big dump candle right there. And I talked about us possibly being in this range through February. The bears pushed down. The bears pushed below that. This is a level the bulls are going to have to get back to. let's say 40,250. They got to get back in this range. If the bulls can fight and get back up in this range, and specifically above the mean of that projection at about 44.2, look to the top side of the 68.3. We're back up at 55K. Boom, boom, boom. Then all the bears are crying again. Everybody's like, crypto shit. Crypto's going to the gutter. Can't listen to these idiots on YouTube, including me if you think I'm an idiot, right? We're going to give you some facts, though. We're going to give you some credible intel to act on. Okay, let's see. Right now, got a nice little weekly doji building up. Price action is in the weekly 68.3 Laplace distribution range, firmly right in between it. Bottom side 35,586, top side 37,892. All right. Or actually, wait a minute. Yep. Okay, that's enough of that. Let's go over to the ultimate power mean chart. And a lot of you guys just got this. The way I have this set up, I have 3 plots set on power means, set to a 9, a 33, and a 99 power mean. The band is set to variance log moving averages. And I haven't quite got them all set where I want them to. But the white dotted line, that is reverse wave trend. That's the 4th plot. My 5th plot, the red dotted line here, that is reverse Fisher. That's how I've got this set up. And you can see right now we're battling with the 33. This is the 33 length power mean. Okay, powerful area. Look where the candle closed. Look where the previous 4-hour candle closed. It shot up, almost got up to the reverse wave trend. Rejected. Where it reject off of? Let me see here. 1, 2, 3, 4, 5, 6. I'm pretty sure that is the 33 length variance log MA2. Right together with the power mean. Candle pulls back right before close, closes right below them both. That's what I love using that 33. Now we're back down. Where's the candle at right now? This skinny little white line, that is the mean of the deviation bands that you see in dot form. Okay, that is the mean of the 4-hour deviation bands. So that's enough of that. That shows you right there that 33 rejected the price action. Okay, let's go to the main trading chart. Let's see what's going on here. Right. Am I on 4-hour? I am. Okay, we're literally having an outlier on the 4-hour log return Z-score, excuse me. And if you're all just joining, I'm jacked to the tits on caffeine, so bear with me. All right. Now, we all know, usually on this log return Z-score, when you hit these confidence intervals to each side, especially the 99, this bad boy is going to make its way down, right? Now, right here, you can see it got up to about the middle, boop, dump again. We're getting close to the top side here. 4-hour, this is going to be interesting. Now, I would rather see this 4-hour reject here and maybe go back down to 36. Go sideways while the log return Z-score drops a little bit, maybe to the downside, and then pump its butt up. Get up above that weekly range, 38,750 area. Top side of that weekly price action volatility range. I mean, you can see why we got to pump. I mean, there was bull div on everything, right? I mean, for you guys that don't know much about divergence, right? We got all lower lows on price action, right? All lower lows. Look at the log return Z-score. Come on. Gimme. Oh, bam. Even the Fisher had some bull div. DLP, bull div. Right? Lower lows on price action, higher lows on all the indicators, even the returns oscillator. Yeah, I know it's screaming at me, but you didn't give me a green line, Bilbo. There we go. You can see how I got my chart set up. Everything I use for divergence, barring Fisher, is based on log returns. Deviation log pro, right? Log returns weighted with deviation. Returns oscillator. Log return Z-score. Okay? That's all I use these for. Divergence. between price action and returns. Why? And I'll say this again. I try to shove this down people's throat. The only divergence that matters is between returns and price action, right? When you see that divergence, it's literally telling you the return on your investment is diminishing. If people would just realize that, they would shit can their RSI, they would shit can their stochastics, they would shit can their MACD. I mean, it's ridiculous out there. But it's an industry-wide scam. It's being pushed. It's being pushed. They're using retail traders for liquidity. Do you think these high-frequency trading firms are using traditional TA to program their algos? If you do, continue doing what you're doing. You're on the other side of my trades. You're on the other side of the algos trades. You're on the other side of a lot of alpha traders trades. Period. The end. Once you join the camp, you'll figure it out. You start studying volatility, probability, and statistics, you start to realize these things. All right. And then on this side of the chart, I've got my entropy. I've got my Z-score. I've got my Z-score of historical volatility, and I've got my volatility percentile. When you take indicators that are not directional, like entropy, like percentile of entropy, volatility percentile, when you correlate them with a Pearson correlation, with a Pearson correlation, with a Pearson correlation, with a Pearson correlation, they become directional indicators. There's very few people you're not going to find this information anywhere else on YouTube. People aren't talking about this stuff. Do you think these high-frequency trading firms have a YouTube channel saying, hey, you guys need to trade volatility, probability, and statistics? Hell no, they don't. Why would they? This is what we're here for. We're trying to help people, right? Sometimes I'm a little brash. That's because people need smacked. When are you going to lose enough money? When are you going to realize? That's what we're all about here. Wake up. Wake up, traders. Okay, so let's take a peek here. This was the last trend on the 4-hour. Everything since this dump that we had down to that 33K level has been random. This is why we use entropy, right? The market is in randomness 80 to 90% of the time. Entropy is going to tell you when the market is going into trend. The other indicators, like entropy percentile, historical volatility Z-score, volatility percentile, and the divergence between price action and returns is going to give you the direction. You stay in that move while it's trending, right? While it's trending. As soon as that next 4-hour candle gets out of trend, take your profit. If you like to swing trade to 4-hour, it's a great, great, great way to do it. A lot of us trade the low time frame volatility, right? Like down on the 15-minute. Let's let me see 12 hours in my mind for some reason. Let's find out. See if there's any div building. So is what I believe is going to happen, like 12-hour and daily. We'll check the daily next. Is this 9 length of variance log moving average is at 40.5. Remember what I was just talking about at the beginning of the stream, that if the bulls can close up above the top side of the weekly range, 38,750, the thing's going to run to 40K, probably almost immediately. That's right where the 9 length variance log moving average is at, 40.5. If they can get above that, we need those bulls need to push that thing 42, 43K. Like I said, that top side is at 38,750. Unless they put $4,000 or $5,000 of price action in between that BTC data set and the top side of that weekly range, it's a magnet. That price is going to drop right back down to it. Mark my words, it always happens. Same thing with the bears. If the bears can drop this thing back down to 33, 32, you're going to see Bitcoin at high 20-something thousand dollar range. We can look at some probabilities here in a minute. We'll go down to what was that second SD? We'll go over there in a second. But as far as, I mean, look what's building, right? Look what's building on the 12-hour hidden bear divergence, right? Between, I'll tell you what, it's only on log return. It's only on the actual, only on the returns oscillator. The log return Z-score actually looks good. Actually looks good. Let's see if we do get a little pullback and you see this 12-hour return oscillator get back down and bounce off this zero mean, that'll be pretty good because it'll be bouncing on hidden bull divergence. And considering there's no hidden bear on log return Z-score, there is some building on the Fisher, but I use this Fisher indicator more or less as a little bit of more confluence. Go in the stream chat. Yes, Aaron. Actually, I did put that on. I put that on at the end of last week when it was dumping. I'll go over there and I'll throw one on there. Let's see here. There is no div, right? There's still just bold div building. Bold div building on Deviation Log Pro on the 12-hour. Now, if this entropy percentile continues to contract heading into negative correlation, that is good for the bulls. 100%. Same thing with the historical volatility Z-score. This Z-score continues to drop to the downside and goes negatively correlated. Good stuff. Volatility percentile. If it contracts, negatively correlated. Good for the bulls. We're going to see those higher numbers. Okay. The daily. What's that 9? Let me see what this 9 length is. Come on, Trading View, cooperate. I know you don't like our powerful indicators, but that is okay. Here we go. And this, to be honest, the daily, right? Look at the daily log return Z-score, just like I was talking about on the 4-hour. When these babies hit these confidence intervals, they usually go right down to the other confidence intervals, right? So the good thing too on the daily is that there's no hidden bear building. Now, we get a pump and this return oscillator creates a higher high from this point. If that price action isn't back up above, let's say it needs to break that 9 length variance log MA, and that's at 42,782. But to be honest, to cancel out any hidden bear, we need to see BTC's data set above 44K, especially if this is creating a higher high here. So keep an eye on that. Keep an eye on that. The entropy on the daily is going back into randomness. It's not yet, but usually when you see the entropy drop outside these standard error bands, it's going to pull back in. It always does. It always does. It doesn't like to stay out there. What's going on with historical volatility? Is that baby? I'll tell you, this is what you don't want to see. Look, we're getting significantly positively correlated. The historical volatility Z-score. If this Z-score turns down on the daily while it's positively correlated like that, it's not good. It could be in the bear's favor. Especially like I talked about this the other day. Look at the entropy or the volatility percentile is pegged at 100% positively correlated. If it stays positively correlated and starts to contract at all, that's another feather in the cap of the bears. Yeah, that's one we don't have published, P-Funk. It's built into the power means now. The ultimate power mean has got all those plots, so we never really published. All that is volatility log moving average, or sorry, variance log moving averages. There was 4. It's not really a published indicator because, like I said, it is built into. Let me pull up this real quick. It's UPM here. Open up. There we go. Like the UPM has got 4 plots, right? And you can set, or 5 plots. You can set those plots up as variance log moving averages. Like right now, I've got my ribbon. I've got the entire ribbon VLMA. So you can literally you can set these different lengths. There's 15 of them. I have not set this to the actual way I want it, because I want those to go all the way up to about 144. So I got to do a different spread on these lengths to get that number that I want. But that's all that is. It's just volatility, or volatility. I got volatility in my mind. Variance log moving averages. And the variance colors, you know what? We have got a little chart too that go along with these colors that I need to post in the Discord. I'll get that out, because all these colors mean something different. When these variance log moving averages are blue, that is telling you that the log returns are above the mean and the variance is rising. When they're pink, it's telling you the log returns are below the mean and variance is rising. When it is yellow, it's telling you log returns are above the mean, but variance is coming down. When it's orange, it's telling you that the log returns are below the mean and variance is coming down. When it's white, just think of it as indecision. It's like it's a 3-candle set, and like 2 candles, variance is going up, 1 candle, variance is going down, or 2 candles, variance is going up, 1 candle, variance is going down. So it's pretty much just indecision.